cash crisis worse. Talking about Venezuela once again.
Systemic important banks. They removed the 1.5Trillion called monetary preparedness.
All right, we are live for a aftermarket RTD news check-in. Excited to be back for a new day. Lots of things unfolding, but yet more of the same. And over my shoulder here, I have two of the most influential talking heads in the global monetary structure. So we got Mr. on this side, Jerome Powell, and Christine Lagarde on this other side. And despite the continuous jawboning of trying to fight inflation, but then again, they're having a lot of complexities in being able to stay on the same page with their monetary policies, all due to the fact that global debt is not all the same. And over here we have the euro, which is a failing experiment. And then over here we got the current reserve currency, which gives us a little bit more leeway to raise rates as if that actually matters. But once again, I think the divergence of these two monetary policies here gives a good indication as to where things are heading, and how right now this is scramble to try to just save face, to make sure that they don't look like they are completely incompetent, even though the markets are already, for the most part, gave up on them. Just look at the current bond market activity. But go and dive into that more. Anyway, hope everyone's doing well. As well, I want to make sure any first-time viewers out there, perhaps, make sure you let us know where you're watching from via the chat. And then, of course, come back tonight at 9:30 p.m. Eastern Standard for the live stream, where you get a chance to call and let your voice be heard. And definitely give everybody a chance to, share their 2 cents on what's happening. Of course, there's more stories than I can cover, but I'll try to do something short and concise within this time frame here, just to, give you guys something to chew on and something to think about. But if you're new, click that subscribe button, as well as click that bell notification, so that you'll be, notified, hopefully. And then also, I want to encourage everybody to make sure you go to the social media tab beneath this video here at the very bottom and connect on all these social platforms with any of your favorite content creators. More than likely, they're probably on these, and that's a good way to stay connected, just in case we're disconnected from YouTube. All right. So with that out the way, let's jump right in. So different approaches toward monetary policy. One had emergency, one had a hike. It's irrelevant, because the debt is unsustainable, and no matter what, calamity lies ahead, regardless of the fact. And so this real quick, let me just check in before I get started. I like to always start off with a little bit of good news. So if you don't mind, let me go ahead and plug in with some good news real quick. And for those that have been around for a while, you know exactly what I'm referring to, the ultimate form of good news, which happens to come from the word itself. Just because if you don't seek out good news, the media will definitely give you all the bad news that you can afford to handle or not afford to handle. But I want to definitely start off by, sharing the good news with my people on RTD. So let's jump right in. Once I close a few windows, won't be long as always. Just want to get straight to the point, share my 2 cents, and give you something to chew on for tonight's live stream. I got just too many windows open right now. Wow, just scrambling right here. I'm scrambling, but bear with me. Okay, so here's just a little, some verses I put out there earlier. Give my people something to wake up to this morning. And so this comes from Matthew 13:11. I'm in Matthew heavily. I'm drawing to Matthew, really strong these days. Lots of meat in that scripture there. But real quick, it says, he replied, because the knowledge of the secrets of the kingdom of heaven has been given to you, but not to them. Referring to the parable of the sower. And so this is just basically, as I look at it, there's a lot of, as I said here, there's a lot of inside information. There's a lot of insider information for those that are in the kingdom of heaven, or in the kingdom of God, rather. And it's available to you if you're willing and wanting to seek it out. Because right now we're being bombarded with all types of information. And majority of it is negative in nature. You'll never see any back-to-back good stories coming from a mainstream media source, just because it's not allowed. They don't tolerate that, because the goal is to keep everybody in fear. And so literally, if you need good news, you got to create your own. And for me and mine, it starts with getting into the good word, because that's the ultimate form of good news, because it goes beyond its current paradigm of thought. But real sweet and simple, it says, insider information is available for those who seek the kingdom. It says, for the Lord gives wisdom. From his mouth comes knowledge and understanding. And that is a proverb right there. And then, of course, rise and grind for the king. So there's a lot of secrets out there, and the Lord would love to have you plug in to that if you are wanting it. So go get it. It's there for you. All right. That's the good news of the day. Now let's jump into one of the more important stories that I think the Fed rate hike was kind of anticipated. We knew they were hiking, you just didn't know how much. But I think overall they'll continue to hike until they can't, and then they'll have to make a decision at that point, which at that moment, the reason they'll be making our decisions because all calamity, all hell is broken loose somewhere in the economy, whether it be the bond market, stock market, the derivatives market, some type of product that they create is going to blow up in their face, and then they're going to respond, possibly. But anyway, this is important because this goes against the narrative, and this happens to do with the fact that out of this ECB experimentation of trying to grab all those nations together with all their complexities and problems and trying to maintain that, it's impossible because the debt. So real quick, it says ECB caused extraordinary. Let me make sure I got my screen here so people can see me. I got to zoom in some things because I mean, 1 second here. Okay, got about 4 or 5 articles here. Won't be long, but just want to give you some nuts and bolts to chew on and then bring it back later on tonight. ECB calls extraordinary meeting to tackle. They called a meeting. The same people caused a problem. They called a meeting to tackle the rout in the bond market. And so basically to tackle the rout in the debt market amid echoes of a debt crisis. And so this was not something that they probably foresaw or needed to do or realized they would need to do, but here we are now. So it says European Central Bank's policymakers were holding a rare, unscheduled meeting today to discuss a blowout in borrowing costs for some eurozone nations. So the blowout happens to probably be in the pig nations, Portugal, Italy, Ireland, Greece, and Spain, more than likely. And I'll give you here, it says bond yields of bonds issued by Italy, other debt-laden nations have risen sharply since the ECB flagged a series of rate hike last Thursday. So they were already in the negative, and just the mere thought of hiking rates to get into positive territory automatically causes an implosion. And so on the other side of the pond, here in America, we have 3/4 of a point hike, puts us still well beneath the 2%. And well beneath, the fight to really fight inflation. And the only reason we haven't had a substantial blowout, as it's saying over here in debt, is because we got the world reserve currency. And despite the sell-off in the debt market, people still need dollars. And so it's like, you're damned if you do, you do it, you're damned if you don't type of thing. They still have a use case because everything happens to be priced in dollars globally. Not everything is priced in euros. So a lot of those nations that are going belly up, they have, isolated debt problems within a currency that is, not really all that strong, to say the least. But real quick, it says, facing the threat of a repeat of the debt crisis that almost brought down the single currency a decade ago, ECB's governing council was meeting to discuss how to respond to recent market turmoil. So once again, you got the same people who caused a problem meeting to try to fix the problem. The only thing they can come up with, the very, very best solution they can come up with is how to compound the current problems, because the only thing they would say is to either cap rates, lower rates, or begin easing again, continuously. And to my knowledge, I don't think they actually stopped. I think they're talking about stopping or something like that. I haven't been following much, but the only solution is more of the same, which automatically means it's already failed. And that was the gist of their meeting this morning, I'm sure, because there's nothing new going to come out of there that's going to really solve a problem. The only problem is to just let it come down, let the house burn down, clear the ground, and build again. And along with that comes a lot of pain and a lot of casualties of financial catastrophes, but that's a part of the game that's needed. So here's the problem. They're about to bring it. It's going to fall down on its own. But then again, they already are prepared to talk about their solution. And that's the next article right here. The ECB would limit the digital euro to maximum 1.5 trillion euros. So the currency is on flames right now. It's burning. And let me actually, just for those that might be relatively new, let me just go back and give you a little bit of the problem here. Let me get my visual aid up here. So the currencies, as we were told 34 years ago, they're all burning right now. They're on fire. And the fire represents the inflation or the consumer price increases is bananas. And so right now, guess what their solution is? Cryptographic tokens. They're going to let the house burn down, clear the ground, and start building again. But this time they build it in a digital manner solely. And of course, at some point they're going to rein in the paper euros. So we can kind of see where this is heading. But once again, problem, reaction, solution. But just a quick snippet on what's going on here. ECB will limit the digital euro. So do you actually think they're going to cap the euro at 1.5 trillion digital units? Come on now. Nobody can believe that. But if the house burned down fast enough and emergency measures, some legislation will be passed mighty quick that would allow that 1.5 to come into existence. But because it's programmable, it's unlimited according to what they need. But in order to sell it, you got to give some people a cap, 1.5. So is that scarce? Is that equal to scarcity that the other crypto coins would have? Probably not. Anyway, keep moving. It says a member of the ECB executive board appeared before the European Parliament Committee on Economic and Monetary Affairs to report on the development of a digital euro as the program approached the 1-year mark. The eurozone central bank initiated a 2-year investigation to the possible digital currency last July. While it's not said when it will decide on proceeding, so I said we're not really sure we're going to do it or not, but we got everything ready just in case we need it. Panetta said that he's optimistic that a central bank digital currency will be reached for launch in 4 years' time. So if the house burns down and they are looking for ways to re-stimulate or inject new currencies, they either can go the old route by lowering rates, buying bonds, and just that way, or they can bring in this whole new way. So my projection would be that if the house burned down within the next 12 to 24 months, you better believe their first solution is going to be we need to get direct stimulus into the citizens' hands. CBDC, if it's ready or not, it doesn't matter. We need it now because we have to help our people. That's usually how that's a problem, reaction, solution. But anyway, it says a digital euro, if issued, would be capped. How do you cap it? Like, do you put that in a code? Is that like built into the open source code that they're going to be using to cap it? No, that's what we're being sold. Capped at 1.5 trillion. It says a concern with the CBDCs is first that consumers will keep all their money in the digital format. So watch this. That's a concern. They're concerned with people once they get those digits, they're going to keep them in digital form. I'm not understanding that because I would assume people would definitely still want to have access to cash, whatever cash might be left. But it says, in effect, depositing all their savings with the central bank and starving consumer banks of the funds they require to lend to individuals and businesses. So the conflict of interest from what we're being presented with is that if the ECB on their servers, they got all the digital wallets, why would this commercial banks be needed? And so how do we, keep them in operation? Because the commercial banks are the shareholders of the ECB and the big central banks. So how would all that work together? And my thought process would be that would be then the use of a interoperable ledger platform using the digital euro, which would be a stable coin representative that the commercial banks could still use, and they'll spin off new projects. And once cryptocurrency after this next crisis is institutionalized, the central banks will get commercial banks will get first dibs at being the primary storage units and crypto exchanges and all the lending and all the things that Celsius is going belly up for intentionally, all that because it will be insured under whatever insurance mechanisms that the commercial banks have for regular deposits. It's going to be rolled into the banks. So the commercial banks will still be operational, but they'll also have access to cryptos and the fees and all that stuff that they, do already. It's going to be ran through the commercial banks in the US and around the world. So that's how the big banks will make. So watch this. Just I got some thoughts. After this next market crash, this systemically catastrophic event that will ensue, whether it be because of the debt ECB or the US or somewhere in Japan or China or wherever, it's going to just sweep through the entire globe. All the monetary system is going to go through a reset. We all knew that. And they call it the Great Reset. And, normal times, every time the debt Ponzi scheme ends, it's called a debt jubilee. This happens, every so often. I'll bring the same articles tonight, so we'll talk more. So bring your thoughts, 9:30, and invite a friend. and we'll keep it going. Keep it. It's funny. No, it's not funny. It agitates me because I try to, focus and be in my zone, and imagine like, not being able to, just deliver your best. And always is some type of complication. It's like to me putting forth an inferior product, and it's just unacceptable for me. So I just don't. It's embarrassing to me, to be honest with you. But anyway, tonight 9:30 p.m. See you guys then. Peace.